morning, everybody. Mike Vacchi, Princetontrader.com here for ntmarkets.com with your Monday morning pre-market webcast. Okay, if you didn't catch the evening recap last night, please check that out. It's on the website. It's on the Twitter page. Essentially, what's happening here is what we were talking about last week. We had very tight Bollinger Bands, and there was going to be a resolution. Whether that resolution was up or down remained to be seen, and the resolution turned out to be down. With bands that tight, a resolution down makes the second standard deviation band basically irrelevant. And it's an important lesson to learn if you're going to trade this way, because if you just closed your eyes and bought that second standard deviation band because that's quote unquote, the place to buy, you got crushed. And it's because the bands were so tight. So we went down and we punched the third standard deviation band. And we spent Friday exactly where I expected us to spend it, which was between the two bands. We're still doing that this morning. I think there's going to be a little bit more of a push down. I drew this box for everybody last week, the 38 to 50% retracement of this smaller move. I think we trade down into this box, and then we bounce. What happens off the bounce is going to be critical. Is it a lower high, and then the bears can make a lower low? Or is it going to look like this? We traded all the way down to the 1553 area, and then we made basically a V up off of that area to new highs. So that remains to be seen. Do we bounce back to the middle band? Do we bounce back to the red line here, the 50-day exponential moving average? Who knows? The key is what happens after the bounce. So I'm expecting a little bit more downside, at least initially. If we do make that lower low and break through, then you have to start looking at areas like the 200-day exponential moving average, areas starting down around here. Does it see? And before you say, oh, that's so far down, we were just there in June when we went ahead and retraced the entirety of this move. A move here to 1565 is just a 38% retracement of the total move, the 1340 quarter to 1705. So before you get upset about how much, quote unquote, how much we're pulling back or how much I'm looking at us pulling back, you really have to look and see where we've come from. This has been a tremendous run up in the market, over 400 points on the E-mini. So retracing 150 of those points is not unusual. It doesn't break the uptrend. And in the long run, it's healthy for the market if you're a bull. It's time to do some reloading. And if this pullback here doesn't prove to be enough and lower lows are made, it simply means that we need to make a deeper pullback. So that's what I'm looking at. If we break through, if we do a V bottom off of here, we will break through 1705. We will get up into areas like 1725, absolutely without question. The only issue becomes on a V move up is, do we get through middle band, and then do we double top? And that's the same kind of thing that happened up here with the 85s. We got back through the middle band, and then the issue became, were we going to double top? And that was right up in here, and then we broke through. Okay? So that's what I'm looking at. No economic news today, so it should be a fairly quiet day. Everybody have an amazing day. This coming Wednesday, I am doing a webinar at 4:30 p.m. after the close of the market for about an hour. We're going to talk about volatility levels, going to talk about the pivot points and how to use them in your trading. So a little more detail than what we get into here. I hope you can join us. There's a link attached to this post. The webinar room is pretty small. So I would go ahead and sign up today if you're going to come. Get your spot reserved. I don't want anybody to get locked out. And I will be back tonight with the evening recap and the pivot points, and tomorrow morning with another webcast. Trade them well, everybody.